remember, remember, this is a review of back testing the previous week that just ended. This is week 6 that just ended, or trading week 6 in the month of February. So we are looking at what has happened from Monday last week when the trading week opened till yesterday evening. And we're going to be doing this every week, Saturday. So get ready, invite your friends and loved ones who are in Forex market who would like to join and learn something, okay? Just on this particular review alone, you're going to learn a lot that you never thought you could learn. And also what would have worth a lot of money for you. So I want you to get yourself ready for this. And if you can see my screen, just let me know. I want to welcome every one of you again one more time. Let me know if you can see my screen. If you cannot see my screen, also let me know, so we know how to sort out any technical issues on the site. And again, I'm expecting more people to come in because some people don't have the time correctly. So they're having challenges with the time. Yep. All right. So great. You can see my screen. Thank you very much. Thank you very much. All right, we're live now. This program, I actually designed it for my group members, everyone on my Telegram channel. So it's a benefit program for everyone. This is one of the beautiful freebies that you're getting on being a member of the channel. So I want you to pay attention to what we're going to be talking about right here. Now, the first thing I want you to see is the chart. We're looking at the chart right now. Okay, you're looking at the chart right now. This is 4-hour time frame. You're looking at the 4-hour time frame right now. Okay, and I believe you have your computer in front of you. Your chart is open, your trading view. You're looking at it right now, GBPUSD. And that is the pair I trade the most. Actually, it's my best pairs, is my pair. GBPUSD is my focus pair. If you ask me what pair do you choose to trade, I'll tell you it's GBPUSD. Every other pair is secondary. I don't even look at them really. Most of the time, I just look at what the market is doing in general. That's when I look at all those pairs. But if you're talking about me trading, I just go on here and trade GBPUSD. That's what I do. I come on here, trade GBPUSD, because GBPUSD is the trade for me. I believe is the best pair. I know gold is good. A lot of people trade gold, all right, but if you understand GBPUSD, if you understand it, you make some good stuff. You make some good money. All right, it's very important to understand your pairs. Now, some of you trade gold. How many of you trade gold? You trade gold, that's your pair. I want to know. Put it on the chat box. What pair do you choose? Do you trade on? I need to know. I want to know what pair you trade. Put it on the chat box for me. Let's see. Let's see, so that I will not speak over your heads today. How many of you trading gold? You trade other pairs apart from GBPUSD? Put it on the chat box. Let's see. All right, I'll be looking at it. Yeah, put it on the chat box. Okay, somebody is trading Euro, EU USD. Good. Who else is trading other pairs? Okay, that means everyone else is trading GBPUSD, right? Or you haven't picked a pair yet. Now, what I learn and what I teach is laser trading. Laser trading means you have to master one pair. You learn to master one pair first before you can do a lot of things. If you don't want to be jack of all trades and master of none, All right. And one of the problems that we have in Forex is when we try to trade everything, we try to buy everything, try to sell everything, and be a master of none. So let me just show. I think some of you need to see my face. You haven't seen my face. Let me just turn on my camera so you see my face. All right. Now the jack of all trade and master of none is not an option. It's not something that we encourage. You don't want to be a jack of all trade and master nothing. Okay. So in this forum, as this channel is concerned, this group is concerned, we want to help people understand, or help trader understand, that mastering one pair is key to success in trading. That's number one. Take that home with you. So if you are choosing Europe USD, whatever pair you're choosing gold, I will not be able to give you analysis of all those pairs today. But whatever knowledge I'm going to share with you today can help you to gain insight into looking at the market generally. All right? Because most of the things I'm going to be talking about is structure based. All right? It's structure based. Okay. Now, this is a review. We're starting now. Remember, you leave your questions on the chat box, or you raise your hand if you want to say something. All right. Now, this is GDP USD 4-hour time frame. We are on GDP USD 4-hour time frame. Now, as you can see right here, price has been trending this way. We see price has been moving down. Okay. If you see that it broke out of a channel and then it started moving up. Now we have consolidation. I have to admit a lot of people in it. So now we have consolidation. This is a sideways. This is called sideways market or trend. This is sideways. So for the past 1 week, we have been trading sideways market. We have been trading sideways market. A lot of people didn't know that. So some people say don't trade sideways market because you don't make money on it. You may lose money. They call it consolidation. Well, this is 4-hour time frame, and we're looking at it on the sideways trading. So if you go to the lower time frame, smaller time frame, definitely you're going to see that there are micro trends in this sideways market. There's a micro trend in it. Okay. So that's the first thing you do when you come to the market. You look at the direction where it's going. You look at the direction. It's called trending. You have to talk about where the direction is going. Please mute yourself as you come in. Please mute yourself. Okay? Thank you. Mute yourself as you come in. Thank you for coming in. I appreciate every one of you for being on this live stream today. All right. Now, having determined the direction of the market in the 4-hour time frame. Now, I'm a day trader. I believe everyone here listening is a day trader. If you are a swing trader, I may not be able to give you some of the ideas on structure right now. But I'm a day trader. And as a day trader, I look at things from different perspectives. 4-hour time frame, 1-hour time frame. I stay on 1-hour time frame a lot, looking at structures, analyzing the key levels. And then I also go down to my 15 minutes time frame to get my entry. So all of these are strategy that you can use to get into a trade. But now we're doing a review. What has happened in the past from a Monday to Friday yesterday? What was the trade? How many of you got profit? How many of you lost money in the trade last week? So we need to know. Put it on the chat. If you made profit last week, this week that just ended in trade, any of the days you made profit, put it on the chat. I'll need to see that. And those of you who didn't make money, you lost money, put on the chat. This is Forex market. We have to be sincere. One of the motto of this group is to be sincere. So be sincere. If you can say you made profit, then say I made profit. If you said you made a loss, be bold to say I made a loss. All right, because there is no forex trader that doesn't lose money. Trust me, you just have to have a margin or an edge. So when you have a winning strategy, you will always have an edge. That doesn't mean a winning strategy doesn't lose money. Every winning strategy have a potential of losses. You need to understand that as a forex trader. Oh, great. Okay, we see somebody making loss, somebody making profit, a lot of people making profit and loss. Okay, great. With a minimal loss. Great. Victor, well done with a minimal loss. Then Jeff, you made a loss. Okay, great. Everyone, yeah, put in there. Great. You made a profit. Wonderful. Victor, you made a profit. Wonderful. Okay, a profit with a minimal loss. Awesome. Great. Now, it's important that we get a feedback from you. Great. Chijoke, you made profit. Well done there, CJ. Who else? It's a week. So we've been trading a sideways market. Jeffta, you made a loss. Okay, that's fine. We're going to look at that today. Why was there a loss? Why was there a profit? What happened? So we'll take some questions. We'll take some questions and answers today. And also we'll look at if you're coming in for the first time, please just mute yourself as you're coming in. We'll give you opportunity to say something if you want to, so that we can have a clean recording of this video. Somebody said I made a loss of $300 by sudden spike of gold. Okay, you trade gold. Yeah, that's one of the things about gold. All right. Okay, let's get started. Now, I'm going to drive down to now we already know the structure of the market. What structure are we again? Sideways. So we were on sideways market last week. So even though by Friday, yesterday morning, if you were to look at the market, you would have seen that you were on the sideways market. So you like thought, okay, where is my angle? What do you mean my angle? My key levels. Where are my key levels? By now, you should have drawn out your key levels and know exactly where you are. So you say, okay, fine. When price gets to my key levels, I'm going to take action. What should I be expecting? What action should I take when price gets to my key levels? So those are the things you look at. All right. Now, I'm going to stream down to 1 hour time frame, and I'm going to let you see something very important. Now, this is 1 hour time frame. We are still on the sideways market on the 1 hour time frame. We are still on the sideways market, but we can see that price. We can see that price is moving in between a boundary, which is called key levels, in between support and resistance level. You can see that I have a resistance level here, and I have a support level at the bottom. So you can see price moving in there. All you need to do is to understand where price get to and know what is next. And if you don't know how to draw support and resistance level, leave it on the chat. I want to know how many of you don't know how to draw support and resistance level. Put it on the chat box right now. Let's see. I need to know if you don't know how to draw support and resistance level, put it on the chat box. Put it on the chat box. If you don't know how to draw psychological levels, put it on the chat box. Okay, I need to know. Let me know your state so that I am not going to be speaking over your heads today. But I might have to have another class for that. But for now, this is what we're looking at in the 1 hour time frame. Now, the 1 hour time frame gives you an idea of the current market. What did I say? The 1 hour time frame gives you an idea of the current market. What is going on in the market right now? Okay, now that's what I'm looking at. Oh, what is going on in the market right now? This is what is going on in the market right now. It's a sideways market. And again, like I said, you can draw your key levels on a 1 hour time frame as a day trader. You can draw your key levels on a 1 hour as a day trader. You just need to know where are your key levels, how to draw them. or you can look at your psychological levels. Psychological levels doesn't have to be a number of 50 pips. It doesn't have to be. It can be a number of 100 pips. It can be a number of 500 pips, 250 pips, 150 pips different, 25 pips different. It depends on what you can deal with on a psychological level. Once you understand the mentality or the ideology behind psychological level, it is easy for you to draw psychological level at your pace when you see price. But it's better if you can understand structures and know key levels where price reacts at different bases. Once you understand that, it is easy for you to trade in between those key levels. For instance, this is a key level in 1 hour time frame. This is another key level. This is another key level. You see, it's showing us how price reacts. You see that? Price reacted. Every time price got to that place, there was a reaction. On this basis, there was a reaction. Look at that. There was a reaction. Reaction here, massive reaction in that place. Massive reaction. Massive reaction. You see that? Now, all of these spaces I've circled is telling you a key level where you can draw your horizontal lines and expect price to react as a day trader. Now, if I'm a swing trader, you see I'll be dealing with daily time frame. I'll be dealing with 4 hour time frame as my current time frame now. And I'll be dealing with 1 hour as my entry time frame. All right. But I am a day trader. And as a day trader, I look at 4 hour, 1 hour and 15 minutes as my entry. Okay, great. Haven't explained that very well. And I'm going to move down to 15 minutes time frame. Since I've drawn out all of this space of my key levels, so I'm moving to 15 minutes time frame. Now, what I'm going to do on the 15 minutes is to find possible entries. First of all, on my 15 minutes, that is when I have to look at the section of my trading. When do I start trading? On Monday morning, how do I get into the market? So I go to the 15 minutes time frame. That is my entry. Now you see at the 15 minutes time frame, you can see how price respected again the key levels because you drew them from the higher time frame. So what that gives you is within every levels, you can measure how many pips. Like this one, this is 27 pips from that place to that place. From that place to that place, that's 57 pips. From that place to that place, that is 88 pips. Now, imagine if you were on a trade. Hold on a minute. Imagine if you were on a trade like this from here. You get into this trade here at this level, and you took the price up. That's 89 pips of profit in the market. 89 pips drive. You just take it from that bottom level, and then you just ride it up because you understand structures and key levels. You know, if price is going up, this is the bottom of it. This is the bottom of the key levels of the higher time frame, which is 1 hour. Now you enter the trade in this place. If you enter a trade here and you take it up to the upside, you would have been in money. Now you're thinking, how long did that take? We're going to find out now. Was it in a single day or in a couple of days? So that's what we want to look at right now. So the first thing you want to do is to have a section break on your chart. A section break means a section of trading days. I normally start trading from London section. 6 o'clock, 7 o'clock in the morning, I'm on my chart waiting for a possible action to be taken. So now you can see on the chart, what you see right now is a section. This was Friday. This is Thursday. This one, Wednesday. This one, Tuesday. And this one, Monday. All right. So this is the week we are reviewing right now. So I want you to look at the days you made a loss and the days you made a profit on this chart right now and see what was like. I want you to look at the chart right now and see how price began in that day and ended off that day. In what position did you enter the trade and did you make profit or made a loss? So that's what we're looking at today. And why did you enter that trade? What made you to enter the trade? When were you supposed to enter the trade? Okay, what were you looking for to enter that trade? And those are the things you want to look at for. Now, before I continue, you guys might be thinking, oh, who is this guy? Does he have any idea about trading or something? Well, I may not be able to prove to you all the things I've done, but let me show you some profits. Some of you, how many of you can see my Telegram screen now? Can you see my Telegram screen? If a yes, give me a yes. If not a yes, let me know. I'm trying to share. Let me see. Anyone saying something? Okay, good. You can see it. Great, great, great. All right. So if you can see my Telegram screen, all right, this is the members we have already there. Now, I want to share with you. This is a profit out of yesterday trade. This one. This is a profit out of yesterday trade. That's profit. That's GBpUSD. All right. Now, this is a profit of 4,000 plus. That's a profit. I'm not just, I posted in my group because this is my group. I don't show them anything that I'm not doing. This is 4,000 profit. There, 4,000 plus profit. Close trade. I'm talking about close trades. All right. Now, this is another profit of 5,000. I'm not sure if you can see it to the top there. 5,000 plus. Okay. The same GBpUSD. Now, some of you saw this trade that we took. This is my chart. This is my trade. This is my, I'm not posting it based on someone else. This was my trade. I took this trade. And I think this trade gave me this 5,000 on this account that you see. All right. Now, that is enough about it. I didn't want to, there's so much more. Like this one, this is another trade of 2,000. This profit, close, market close. And this is a video showing the trade to my group. Then I was 700 plus in profit. Now, this is a VIP group that I posted a signal. Now, these are charts. These are channels, the trade. I was telling them we're going to be moving up from there. And then I'm going to show you very soon how this price worked, what happened here. And I was on this trade to the upside. And then I took that trade again to the downside because of structure, understanding structures. It's very important. Okay, that's it about that. I just wanted to show you. Some of you have gone to the channel. If you haven't joined the Telegram channel, I encourage you to join the Telegram channel. There's so much information you can gain on that Telegram channel. Trust me. So get ready for more. Right, let's get back to the chart right now. Now you're seeing the chart very clearly. I believe you can see it. Let me make it bold. Okay, let's go to a Monday. This is Monday. We are looking at Monday trades right now. Here. This is Monday. What happened? On Monday morning, we woke up and we were seeing the market at this level. So what was the action? What were we expecting? Price began to move up here. The first thing that we saw is a pattern. What's that pattern? A W pattern. Okay. Now it was forming at this level of the Asia section. Okay. It formed at that level of the Asia section. Now you have to train your eyes to recognize this. Otherwise you may miss it. You wouldn't know. You have to understand what pattern that appears on your particular pair of trading. If you're trading any pair, you must understand the pattern that shows up on that pair that helps you to mark that pair and trade that pair. Okay, it's very important. Now, if you look down here, you will see that this is a W pattern. Even though you didn't get that one, this is another W pattern. You say, how did you know? Look at it here. On the stochastic RSI, it gave you a W pattern also. And if you trace it to this candle down there, if you trade this candle down there, you see that that is where it crossed. So that would have been your entry to buy on this market. So you would have buy this market here and take it up to that level. What level? We are taking it to the key level. That's where you have put your take profit, because you know price will react when it gets to that key level. Question: did price actually touch that key level? Yes, it did. Look at it. Price touched it. You see the wick on it, wick rejection on it. Immediately it got it, it touched it, it started creating a wick rejection. By then, you would have gotten your take profit out of the market. So that means in the first how many minutes between now and here, if you started this trade by 6 o'clock, 6:45, you enter this market by 6:45, and by 8 o'clock, you already made profit of what? How many pips? You enter the trade here, you get out of there, that's 25 pips already in your pocket. If you knew what you were doing, if you knew what you were doing, you would have made that 25 pips already in your pocket. Okay. Now, the next thing is to watch out what price we're going to do at this level. So price reacted to that level and created an action. So what action was it? An M pattern. Price gave us an M pattern. And it started dropping on an M pattern. If you knew this and you drew your levels, your key levels properly, you wouldn't have missed this trade. You wouldn't have missed this trade. Trust me. How many of you traded this on Monday? Put on a chat box. If you traded this thing on Monday, how many of you did? Thank you. How many of you did? If you traded it on Monday, some of you did, some of you didn't. Leave it on the chat box. I want to see. Oh, nobody, you did. You missed it. Oh, Victor missed it. Oh, CJ missed it. Oh, no. Oh, no. Who else? How many of you traded it? Okay. This is beautiful. This trade on Monday, sometimes people don't trade. A lot of people don't trade on Monday. Jeff, you missed it. Okay. A lot of people don't trade on Monday. Okay. I understand that. But I've discovered in my time of spending on the chart, doing back testing like I'm doing now. This is called back testing I'm doing with you now. A review, but on back testing. Now we're looking at this market. I'm not doing a replay. I'm not trying to get into a trade with you, teach you how to get into a trade. This is not what it's all about. I do that on my mentorship. I train you how to get into a trade on my mentorship. I don't do that on this one, but I'm showing you what would have possibly happened, or how you missed a trade, or how you made a profit on the trade, what you actually did, just to make you see what the market is presenting to you on a weekly basis. All right. Okay, I understand some of you missed the trade, but let me tell you why you missed it. If you missed the trade, let me tell you why. First, you didn't understand stock patterns. Am I still connected? Can you guys still hear me? Back. Sorry about that. I think I had an internet breach or something. I'm not sure what happened. There was a disconnection. So we're back now. All right. Please mute yourself. For those of you on there, mute yourself. I'm going to share my screen again so we can continue. All right, mute yourself. We're back on. Oh, come on. What is wrong with this network today? Okay. I'm not sure what's happening to my network. Can you guys see my screen? Can you guys see my screen now? Okay, let's continue. I don't know what's happening to my network. I can see like it's buffering. I'm not sure what that is. Okay, this is the trade that we're looking at. Please mute yourself so that we can have an amazing recording here. For those of you who wants the record. So here is the market now we're at. Assuming you missed this market, you missed this trade, you shouldn't have missed this one. So at what time was this trade right here? This was 8:45. This is London, proper London section. So by now you should have been up on your computer and waiting to see the reaction. If you have done your key levels right, you would have seen the reaction on that key level right there that I just circled. So at this moment, you're looking at price. And what pattern are you expecting? You're looking at an M pattern or whatever. A weak rejection already give you a sign. And then you have a bearish candle, engulfing bearish candle that took off that week. So that was an engulfing bearish candle. And then a bullish candle moved up. So you can see a pattern is being formed right there. And then the last leg, which was a pull up to the upside, and then started drawing a weak rejection. At this level, you would have entered the trade at this level. If you didn't enter there, you would have entered the trade at this level. How many of you understand now? You got it? You would have entered the trade at that level because this was the break of the structure. Let me wipe those so you see. At this level, price has already broken structure. So this time is telling you that it's going to go down. So you would have entered the trade at this candle. Please mute yourself. Please mute yourself if you're on here. Mute yourself. So you would have gotten into the trade right there, okay? And then you target the next key level as your take profit one. And then your stop loss is about above that place. So what? You say it's not a lot. Well, that was your take profit one. Because at that level, you see price reacted there. So how many pips you would have made? Another 20 pips. Let's say you got out of the market there. I'm being real to you. I'm looking at reality. I didn't expect price was going to go all the way here. I didn't expect price to come all the way down here. All right. I hope you're looking at your chart and you're seeing it, what I'm seeing. So I didn't expect price to come down here. I expected price to react here and go back. So I will put my take profit at this key level that price has responded to in the past. You see, key levels. I'll put my take profit there and I'm looking at price there. So I'm targeting what? 20 pips, 25 pips. Now, if you are trading a standard lot size on any account, your account that is big enough, I'm not talking about small account of $500 or $1,000. Yeah, you could try and trade one standard lot on $1,000, but anything less than $1,000, you should not. I'm talking about your personal account. It's not advisable to trade on one standard lot. So just a thought. It depends on you. This is not a financial advice. Disclaimer here, please. This is not a financial advice. I'm not trying to tell you how to trade your money, but personally, risk management is key, right? Okay. Now you see price there. Let's say you enter in that market there. You entered here. You would have made 20 pips, a minimum of 20 pips on that move. Remember, if you have took this trade, you entered this trade, that was already 25 pips, 27 pips already you got, plus another 20 pips. That's 40 pips already that Monday morning. And then you're out of the market. You're done for the day. Why should you be over trading? It's none of use to try and get the market up again and say, I want to trade this. If you want to, that's fine. But for me, I'm done. 40 pips, 40 pips already by 10 o'clock in the morning. I've gotten 40 pips. What else should I be doing? I'm out. So that's what you should have done. Have this mentality when you're trading market. It's very important. Look at the direction of your key levels and target the potential pips that is there, the pips that you can get within that key levels. Okay, and then once you hit, watch out for price action to take more pips. And once you get to another key level, you're out. Target how many pips you want in a day. You must target your profit margin in a day, your risk margin in a day. It's very important. Have them in your mind. So look at that. Then we have the New York section open. The New York section open, and then we have a ride, but a consolidation ride. So not much of a push. You see, the major push just happened for that day, and we were done. All right. Now, that was on Monday. This is Asia section. Definitely, I didn't expect anyone should be trading this session. If you did, it's because you missed this move. All right. That's clear. If you have gotten this move, there's no need for you to be trading here. This is Asia session. What are you doing? You go take a rest and get ready for the next day. Now look at it. We are now on Tuesday. This is Tuesday. Look at what price did on Tuesday. I want you to see what price did on Tuesday. Look at that. Now, on Tuesday, what you normally do is go back again to the drawing board. Okay, you go back to your 4-hour time frame. Look at how price is behaving. Go back to your 1-hour time frame. Check out your key levels. All right, and then you come back to your 15 minutes time frame to wait for special entry. Now, at this time of the day, what time is this? This is 6 o'clock in the morning. So this is 6 o'clock in the morning at this candle, this very candle here, 6 o'clock in the morning. Now you're waiting for price because remember, London session actually begin by 7, 8 o'clock in the morning. So from 7:30, 7 o'clock, you'll be seeing major move coming into the market. You see this move, 7 o'clock was this move. This move was happening 7 o'clock. Then this move, 7:15. This move, 7:45. You see, moves are beginning to, big candles are coming into the market. That's when you start getting ready for what is going to happen next. You're looking for your own pattern of entry. Now, on my mentorship program, I train people on entry strategy, exit strategy, entry, how to recognize when to enter a trade. And you don't want to miss, that is key to your success, and how to get out of the trade quickly before it go against you. All right, now looking at this market, I can see that key levels is also respected. If you raise your hand, I will get back to you later. Just give me a break. I will be able to get back to you on questions and answers. Let me just finish this review, okay? Keep your questions up and I will take it. Now, look at this. We see that price again is respecting the key levels. And then we have the high and low of the week already also respected. So this is a zone, a very important zone on the market this previous week. It was a very important zone. You can see that. A very important zone. So you see price was beating in that place. You know that price wasn't going to go down to that place anymore. So you're looking at price is staying in that angle. You're looking for entry at these very key levels, entries as these at these very key levels. That's when you're looking for entries, either to buy or to sell. It depending on what happened. But as you can see, price is being rejected at these key levels. So you are looking for a buy because price is being rejected at that key levels. It is very important to understand that. Okay, now let's go back to on Tuesday. This is on Tuesday. On Tuesday, we find price creating a pattern But you have to train your eyes to see, because if you are looking at a trade on live trade, you will not know what is going on, except to train your eyes to understand, okay, this is what price is doing right now. Okay, but let's assume you didn't get it when it was printing these red candles. You didn't know what was forming. You thought price was going to break below and then started heading down. All right, but all of a sudden, okay, if you have your trend line in place, you would have discovered that this was a trend line that was sorry, let me draw it properly so you get it. You would have discovered that this was a trend line that was about broken and retested. So there was a trend line there when I was trading this market. That trend line came from that bottom, and then it was at this level. I marked it at this level as a second touch upward. Now price came, tested that trend line that was there, and move up, and then came back down to break below, and then push back up again. That is a fake breakout there on the trend line. He gave us a fake breakout on the trend line and then pushed back up and gave us a bullish engulfing candle. When you see a bullish engulfing candle to the upside like this, know that buyers have taken over the market. You are looking for an entry. So at the close of that candle, I entered the trade here. I had a little, just a minor drawback, but drawdown, which was okay. This wasn't necessary, but that candle there was trying to respect a particular key level, but obviously it broke above. So I entered that market right there. So if you bought on that level, take it up to the key level again. Let's see how much you would have made if you did that. If you took that to the key level from here to that place, how many pips? That's 30 pips on that trade. Now, if you follow the ta strategy that we teach in our mentorship, the stacking strategy, if you follow that stacking strategy, these 30 pips will give you a whole lot of stuff, a whole lot of profit in your belt. If you follow the strategy, you would have stacked it up with proper risk management, and then at this level, you'll be in massive profit already before you even get to 25 pips. You'll be in money in 25 pips. Okay, so that is exactly what happened in that trade. You just saw it, the pattern that formed. Guess what? Initially, I would have entered the trade. I did enter the trade here. I remember Jeff and I and some other members in the team then, we're on this trade, on this one, because this was a W pattern already. I hop into the trade on this particular candle here. I was in the trade here, and price moved up and dropped. At this time, it was a drawdown. Some of the people started hopping out because they were afraid that it was going to go down. But I realized something, that this is a key level. Okay, throughout the week is a key level. So I knew that price was going to break down, and I had my trade because my stop loss was around here, this level, the previous low. This was my stop loss. Are you seeing it now? The previous low. So I still have a lot of space for price to take me out. So I was comfortable leaving my trade because I didn't stack here. I didn't say, oh, I'm putting all my trade in here. No. Based on proper risk management, I entered one position in that place. And then when price began to drop down, I enter more position at this level. So now I have exhausted at this level. Mute yourself, please. Mute yourself, please. At this level, I have exhausted my 1% entry at this level. Why? I entered at this level, price moved up, and then I had a drawdown. My stop loss was here. So I was not panicking that my trade was going to lose the one portion of my 1%. So all my 1% was not put in on this trade at this level. It is my 1% was exhausted when it had a pull down and it started going up. So I put the last percentage of my entry here. So at this level here, I was already 1% into the market of my trade. Guess what? At this level, I was already in massive profit. Even before it got to the key level, I would have been in massive profit because I risked 1% of my account, and my 1% of my account already entered the trade, and then I was in profit already to the way up. So again, I just taught you a bit of risk management there just to understand it. But if you get into the mentorship program or get into our forum, we'll teach you more on that. You need to understand it and practice it. With time, you get it. All right. Now, this is it. M pattern went up and we took it. I mean, W pattern went up. We took it at profit. And then key levels again was tested. You see the key levels? You see how price was behaving in this level? Now, assuming you didn't enter this trade to the downside on this particular level, because this is an M pattern formed. An M pattern was created here. Okay, you can see that. Assuming you didn't you enter that trade here. Let's say you enter that trade at this key level, at this level here to sell. And you saw this big candle, this engulfing bullish candle. You know what you would have done? Some of you would have exited your trade. Why? You think that price was going up. And then you secure a loss. Right? But if you understand structures and key levels, you will see that that was a respected key levels in the past, a respected key level in the past. So your stop loss, if you enter the trade here on this candle, you enter a trade here on this candle, your stop loss would have been 20 pips away from there, is assuming that's what you're doing, 20 pips away from there, here. So you have your stop loss at this level. So you see, there's nothing for you to fear. Because first, proper risk management, you enter the trade with a minimal size of your percentage. If you are trading 1%, you know, I can't help you. I can't help but teach you guys something. If you are trading 1% of your account, this 1%, you don't just enter the trade with all of the 1%. If price go against you and hit your stop loss, you're out, you lose 1%. You need to know that risk management is key. You enter the trade with half of that first, or 1/3 of that. You enter first with 1/3 of that, and you stay and watch what price will do. So if price begins to go up, that's when you start thinking, okay, what's going on? Is it going up? My stop loss is there. So you wait. I will not enter more position on this green candle yet. I will begin to see price rejecting from here. Immediately I start seeing price rejection to the downside with this weak rejection, and I will put in more sizes. That means my position, I will add more position. Remember, I had a position here. Now price retrace and push back up, and I have more position. What happened? By the time price began to drop, I'm in profit already. Even though price, come on now, guys, come on. You get it? Oh, yes, you got it. I know you did. All right, okay. Now that was a trade, an M pattern, and then it dropped. So you're watching at that. If you didn't see that, well, what happened? Then there was a trade to the upside again. A pullback up. Why? Because a key level was respected. Assuming you missed this trade, why would you miss this one? Why? Why would you miss this one then? Why are you trading? Why are you in the forex market? What are you doing? Look at that. You miss this, and then you miss this one again. Come on. Come on. It's not advisable to do that. So this is why this kind of back testing and review is very important, to open your eyes to see what possibly can be done and how you can make an amendment and spend time on the chart. Stop getting distracted. A lot of you get distracted a lot. You get a lot of things are going on in the background while you are trying to trade. No, you miss opportunities of entries. Now look at this. Trades came in here and then started rejecting it. Who is annotating there? Who? Who is that is annotating on my screen? Please stop, okay? All right, look at this. Price came here and then he rejected once, he rejected twice. Come on, what do you think? Key levels. So you hop into the trade at the next candle of blue or green that you have. You hop in. I mean, you long from there. That's it. And target the next key levels. The next key level, you target it again. And guess what? Your stop loss is right there. Look at stop loss. It's even below. You put it in the previous low. Don't forget the previous low. And you're looking at the next target. And guess what? Price rode for another 25 pips. 25 pips. So assuming you take these 25 pips, you take these 25 pips, another 25 pips. Come on. That's 75 pips in a day. If you were watching out this. Now, to be honest with you, I only took this. I took these 25 pips and I took these 25 pips to the upside. Why? Because I was concentrating on buying trades. I was concentrating on buying the market, not selling. So this market sold. Yes, I understand. But for me, I was looking for a buy. So I bought here and I bought again that day. On Tuesday, that was a trade. I hope you got it. Now, let's move to on Wednesday. Remember, we don't trade Asia session. So I don't encourage you to trade Asia session. You're a day trader. When you're done after the New York session, get out of the market. You're done. Wait for the next day. If you did the right thing, you will be in profit. You won't need to worry about Asia session, try to trade. And I encourage you, never overtrade. Never overtrade. It's not necessary. You will blow more account when you overtrade. Trust me. Okay. Some people have lost money that they made in the London section. They lost it into Asia session. They lost it into New York session because they want to overtrade. You already made profits. What do you want? Get out of the market and wait for the next opportunity the next day. Now look at on Wednesday. This is on Wednesday. On Wednesday, I was expecting to buy anyways. You say, how did you know? Structure. I see price was above these key levels already from the Asia section. So as price was in that key levels, I know that it pulled back in. The next thing was going to do, I saw price pull out of it, pull back in. I know the next thing was going to do was to go up to the next key level. Understanding key levels. In fact, this section that I'm teaching you guys, only alone this section, you start making money on forex market. Trust me. And then it got to that key level. What happened? Price sold, make some profit, and get out. So if you have entered a trade here, put your stop loss at the previous low. This is a previous low. So even when price came, you haven't entered a trade here. So you are still watching the market. You thought price was going to sell, and you saw this big candle up again. So immediately you saw this big candle up, you know that price has broken, have retested that level, and it's still going up. So the next candle, even though it's trying to add bullish, you can bearish, you know that it's going to go up anyway. Okay. So what that means that the key level has been respected and is being taken up. So you are targeting the next level. So the best thing you are going to do is to enter the trade at the close of this candle. You enter your trade there, put your stop loss at the low, at the previous low, sorry. Here, the stop loss will be traced to the previous low. And then you take your trade up there. How many pips? You will target about 35 pips. Or let's say you target this key level. That's again another 27 pips. And you're out of the market. First thing on this is on Wednesday morning, you made money again. Of course, we made money, a lot of money on this trade on Wednesday. A lot of money were made on this trade on Wednesday because I was expecting a buy. Now, I didn't take this sell trade. Personally, I didn't trade this sell, but I saw the pattern. But it was very confusing in the first place. And I know it did to you, some of you who were looking at it, but, but it's clear, isn't it? It's clear. You can see the key level was being tested and tested again 3 times, and it didn't break above. Price couldn't go above it. It tested the first time, it came down, went back to test it the second time, it came back, went back to test it the third time. Now let's assume, guys, you entered the trade because this is a WM pattern, sorry. This is the first M pattern I printed here. Let's say you entered the trade at the close of this candle and you were in the trade and your stop loss was somewhere here and you saw price pull back and then you saw a red candle printing. You'd have entered another position again. And you saw price came down, you will be in profit at this time. But all of a sudden, you saw price rejected and then pushing back up. What again? Another test. Your stop loss is still here. But this time, you will add one more position. That's 3 positions in your trade already. So, because you saw this weak rejection, you added 1 position there. That's 3 positions already. This 3 position is still part of your 1% that you are risking in a day. And guess what? You trade it down. You would have been in profit extremely here, here, here at the key levels. You won your 1%. And that 1% we're talking about, we're looking at maybe depending on what you traded. So from here, where you enter the trade to this place, that's about 26, 28 pips. And that's it. That's all you need to build your account gradually. That's all you need. And you're out of the market. Assuming you didn't take that buy trade, you would have taken the sell trade if you have your structure right. That's exactly what happened on Wednesday. Now, this is New York section. This trade took place in the New York section with London section missed bridge. And then this is Asia section. You don't trade that. Now, I normally talk about breakout on the Asia section. Now, this is Thursday. Right here, we are on Thursday now. This is Thursday trade. Look at Thursday trade. This is Thursday trade, all right? Now, on this Thursday trade, we came out from Asia session. I always tell my students, pay attention to the Asia session. What is going on? Don't just overlook it because you don't trade it. Pay attention to it. There was a breakout to the upside on the Asia session. It didn't give you a certain pattern, but if you pay attention to it, some of you were sleeping at this time of the day anyway. Let me show you why. What time is this? This is 4 o'clock, 4:45 in the morning, 5:15 in the morning. This candle is 6 o'clock in the morning. This candle is 6:30 in the morning. Some of you were still in bed. So you wouldn't have think of seeing any pattern at that level. Trust me. But if you understand structures and market behavior, and you understand strategies and analysis, technically, you will understand that price was breaking out of the Asia section. And then you know that they are going to take out liquidity from the top. So you know already that the money makers are taking out the liquidity here, and they are going to also take out the liquidity here somehow. But the first thing is to take it out first, either to the top side or to the downside. So which one are they going to do? Is their choice, not yours. Your own is to follow their direction. So immediately you saw this bullish candle here, you know that they have broken it. Look at that. They took it out. Every stop losses in that level were taken out. Every sell stop, what do you call it? Sell limit or whatever it is. They were all taken out. Every orders that were against that upside were taken out. So money was removed from the market on this candle. And then if you saw that, you would have entered your trade on there. And then you would have rode it to the next key level again. Key levels, key levels, key levels. and you take your small profit out of the market that few hours of the day, and then you wait for another move. Guess what happened? There was another move on the key levels again. Let's assume you enter the sell on the key levels because you know price was going to reject and go back to the next key level. And then you enter the trade here and the pullback is on the key level. It's going to drop again to retest. So you entered more lots there and then you drop again and make profit and close for the day if that's what you want. But guess what? I didn't trade any of that. I didn't trade this one. Okay. This was a W to the upside and M to the downside. I didn't trade this pattern. What I did was to trade this W to the upside. Massive profit. Look at that. It tested there, created a pattern for me there, and you can see on the stochastic RSI, a perfect W was printed for me. It was clear. I couldn't miss that. And I was it. Bam, 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 bam. Get it? Awesome, right? Come on, guys, talk to me. Are you loving this? Are you loving this? Talk to me. Come on. This is free stuff, isn't it? Let me check your comment sections. Please, can you change the candle to line charts? No, don't worry about that. How do we train our eyes to see the pattern? Spend time on it. What of using line charts? Please, do you guys should mute? Okay. So how do we input Asia section chart? All right, now, okay, thank you everyone. Sweet. Great, it's great. Loving it, great. Yes, okay. All right, great. So if you're loving it, thank you for that. I like that feedback. I like the feedback. This is a good strategy, boss. Thank you. I'm expecting you to use it, okay? Use it. Let's make money. Listen, this market is $6.5 trillion transaction every day. I mean, $6.5 trillion. Guys, there's money everywhere. You can't afford not to make it. All right, look at this. So let's say you didn't trade this. All right, you didn't get into this market. Let's say you didn't trade this. But this was a sudden shock on us because I was surprised how price dropped massively. But if you understood structure, you wouldn't have a problem on this trade at all. But personally, I was done for the day on this market. So I didn't want to trade this downturn. I was okay. I got my profit on this market. This one to the upside, I was done. Okay, I was done. So on that trade, I didn't have an issue. Not taking this trade. Trust me, I was okay. But you would have done it. You would have done the same thing I've been teaching you all day. You'd have done the same thing. See how price rejected on the levels. You see price rejected on that key level. Then enter the trade. Immediately you see a bullish downward, and take the trade. You might target your first take profit on the other key levels. Target the second take profit on the second key levels. Target the other key, third take profit on the other key levels. You just be taking it down, and then I mean, as the price is moving, you're moving in profit. You're moving your stop losses. It's still a plus, even though your account is just $10 plus. You're already in profit in $10. It's something good. So you should be able to hold on to that trade and see you are targeting the next key levels. So you'd have target this key level here, bam, and then you make a few pips there, immediately hit that key levels, see how price respond. Initially, price broke through and came back and broke through again the second time. You'd have hold on to your trade because you are still in profit anyway. So why should you be chickening out? Why should you be thinking, oh, let me close because no, there's more room to the downside. Don't you get it? And it's still in the day, within the day. It's a trading day. This is a trading day. If you look at the time, what time is this? This was around 5 o'clock in the evening, right? This was around 5 o'clock in the evening. You can still have holding your trade. There's nothing wrong with it if you hold on to it, or you just target that, that few pips and you're out. And then you would have woke up the next day after a few hours to see that price went down. You'd have said, oh, I should have taken this trade. I should have hold on to my trade. Why? Okay, we all feed that all the time. And trust you, we all act like that all the time. But the truth is, once you understand key levels and structures, you won't be chickening out. You just target the key levels, every key levels as you take profit. You just target it. And everyone, the key levels is target, you move your stop loss there, bam. As soon as price move away from there, you move your stop loss there, bam. You secure the profit. And then move again. I'm showing you now, again, trade management, right? And then you move again, bam. You move your stop loss there. You move again, bam. This is trade management right here, until you get out. Okay. Oh boy, there's so much here. I hope you guys are enjoying this. I'm about to round it up. This is the last one. This is the last one. Get your questions ready. This is the last one. The last day. Yesterday. What happened yesterday? Again, I don't need to even ask you guys now. What can you see? This is the beginning of the week of Friday day. What can you see? I don't need to ask you. I'm telling you why we made so much money yesterday again. Look at that. All those things we were posting that you saw that Jeff posted, I posted, everyone posted. This is the money. This is how the money was made. Come on, look at the screen. What can you see? You train your eyes to see. Again, key levels has been respected over and over again. Key levels respected. These key levels, price hasn't broken down. Remember, from the higher time frame, we already know that we were trading in sideways market, right? And I already showed you, look at how you mark your sideways. So price have never broken below since. No. So key levels, you're looking to buy. Don't tell me, oh, I'm looking to sell this market. Sell where? Where are you going? Why would you sell? Where are you going? And then you now place, what do you want to sell? You start selling from here, and then you got out, they hit you up. You say, oh, I lost money. No, structure. Understand structure. Understand market structure. Understand market structure. Understand market structure. I can't overemphasize this enough. Understand market structure. Price came down, tested on the key levels. Tested on the key levels and gave us a pattern and then shoot up. Why shouldn't you make money yesterday? I don't get it. Why? Why shouldn't you? How many of you make money yesterday? Show me. Tell me on the chat box quickly. Let's see. How many of you make money yesterday? Please say what the key levels are, high and low of the day. I made good. Dude, CJ made money on that trade. Who else made money? I'm looking at the chat. Come on, tell me. You made money on that shoot up. So how do we input the Asia section on the chat? It's very simple. There are indicators. Look for indicators on your Telegram. What do you call it? It's trading view. Sorry, on your trading view, look for indicators, and then you type sections, and you will see a lot of them. There's so much of them. You just have to test them out. Anyone that works best for you, you put it. Okay. Yes, I'm asking a question. How many of you made money? Please, guys, who is annotating on my screen? Stop. Take it off. Okay. You are annotating on my screen. Don't do that. Please take it off. Who is that? Please take it off. Please. Okay. Thank you for taking it off. You're a good guy. You're a good guy. Thank you, bro. There's still one more. There's still one more. This one, take that one off, please. Okay. Yeah, you made money. Ruben made money. Close small amounts. Okay, that's good. All right, just few of you made money. Really? Yesterday? So how many of you lose money yesterday? You lost money. Let me see. You lost money on this trade yesterday. Tell me. I need to see. I need to see. You lost money yesterday. Put it on the chat box. I need to see that. Let me see why you did. Now look at this trade. Perfect W to the upside. And then it tested the key levels, get on, go back again on the key levels, pull back a little bit, and then pull back up again. Of course, I hopped out on these key levels. I was out of this trade here. But this pullback and this break below actually told me price was going to reverse. For me, I was like, no, I'm not going to lose anymore. I'm done. I was out on the trade here. So I took all of this peep. But again, price came back down and pushed back up, and then that was it. So it tested the other key levels, and then it would begin to drop. So assuming you didn't take that upside trade, let's say you didn't take this, stop annotating on my screen, fellow. Someone is annotating on my screen. Stop, please. So assuming you didn't take that, please take it off, take the annotation off. Assuming you didn't take that trade to the upside, you would have taken this W pattern as well. And then that would have given you how many pips? Maybe a few pips, 25 pips, 20 pips. That is how you trade this market. And this is exactly what happened this week that just ended. And now imagine if you follow this system and strategy, there's no way that you will not be making profits more than losses. You will be making more. Now listen guys, it's not as easy as I have told you now. Okay, it's not as easy as I've told you now. Can somebody mute that? Who's that fellow? Okay. Now, this is beautiful. So what do you guys think? Does it worth it? This section we just did for over an hour, does it worth it? Do you enjoy yourself? Now let's look at your questions. Let's look at your questions. Let's give time for question and answer. I'm done. I'm done. I'm done for the back testing. I'm done for the review. I'm done. Trust me, I'm done now. Yeah, we'll do our best to do it often. Okay, it's still confusing for new guys. Yes, that's it does sometimes. Please do not stop the review. It enhances. Yeah, that's why I started doing it. I know it will help a lot of us. It enhances. Yeah, great. It enhances our trading. Please, how do we draw key levels? How do we mark those? How do we mark those key levels? Because I noticed many of them are in psychological levels. Good. Before I could recognize the W pattern, it has started bearish, so I didn't make any. Okay, how to draw those psychological levels and key levels. Okay, now I'm going to have a training on that. It's going to take me another 1 hour to be able to teach you that. Okay, but I do teach that to my mentor, to my members in my mentorship, in my training program. I teach them that. So it's something that they know how to do very well. Until they know how to do it, they can't move to the next level. It can take you 1 week. It can take you 3 days. It can take you 1 day. I'm not going to, until you know how to draw the levels, you can't move. Because you can see that the success of trading this market that I just did a review with you is understanding key levels and structures. Understanding market key levels and structures. And then the last one is pattern. Understand entering, how to enter a trade and how to, when to get out. That's all you need. And once you understand it in any market, you're good. You're good to go. What I mean by you're good to go, you're good to start trading, you see. But if you don't know all those things, if you are trading, you are blowing an account. This is the reason why you're blowing off account, because you don't understand these things. And this is what the market needs to succeed in it. Please, I will appreciate it. You continue to post a trade call alert before it happens. Okay. I'm trying to disallow signals right now because I don't think that is helping anyone. How do I recognize the M pattern? You train your eyes to do it. Train your eyes. Watch this video again and again, you get it, okay? Someone is raising his hand. Chima, speak. Chima, go ahead. Chima, your hands is raised. Ask a question. You are muted. Go on. Chima. Okay. Any other one? Any other person who wants to ask a question? Any other person? What? Yep. Any other person? I'm gonna stop recording this section now so that I don't have a very long video. That will be having challenges for people on YouTube to watch. I need something very precise, but this will help a lot of people on YouTube. I'm telling you. Now, those of you here, if you haven't subscribed to my YouTube channel, come on, what are you waiting for? What are you waiting for? Go to my YouTube channel and subscribe. Let me show you how to get there. It's very simple. Some of you are already part of my Instagram group. Well done. Welcome. I appreciate you. You guys are doing an amazing job on the Instagram group. Just go to the YouTube channel as you're watching on my screen. Go to the YouTube channel. And when you get to your search bar, type in trader. Just type in trader_C_Brown. You search. That's it. The first thing you see are my few videos I put there. That's it. That's the channel. You can see that. You can't miss it. Immediately you type C Brown, just my anchor name, this name that you see there, Trader C Brown. That's it. _C Brown. And sure you put the underscore. You see a video there. Go and subscribe to the YouTube channel. Go and subscribe because this is the previous forecast I did. And this was, I'm going to do a forecast of tomorrow, next week trade. So I haven't done that. So get ready for that. I'm going to do a video on it and I'll post it. Get ready. It's going to be on YouTube because that's a short video of about 10 to 15 minutes. Okay. Yeah, that's for that. If you haven't subscribed to the channel, I'm pleading with you guys, subscribe. Yes, let's get more people into it. And then let's get going. Okay. Go there now and subscribe. We have 15 of us here. I'm anticipating every one of you to subscribe. The 15 of you, I want you to go there as a thank you favor for me for this training that you just received. This is the only thing I'm asking of you. Go to that channel and just subscribe. Hit the like button and share and subscribe, okay? And if you haven't joined the Instagram, go there and join also. I'm on TikTok as well. Go there and join. Okay. Yeah, Jaftel. Unmute yourself and ask. What do you want to say?
Okay. Good afternoon.
Afternoon.
C Brown.
Afternoon.
Yeah, I really appreciate the training and the eye openers you've been giving us. I really appreciate it.
You're welcome.
Like what happened to me this week was because I wasn't able to identify that the market is moving on the sideways.
Oh, great.
So,
okay.
Yes. So my problem is how to identify the trend of a market because I normally go with the trend, but because of the fact that the market is moving on the sideways, it's made it possible for me to lose money because I was thinking that it's a downtrend. That was why I lost money.
Oh, yes. Yes.
So because of that, I was able to because most times I normally know about these key levels you're talking about. I spot it out, but because it's moving on the sideways, I wasn't able to identify it properly. So my mindset was all filled up that this is going on downtrend, that it's going to move down. But later on, it continued to go up. I was kind of, what am I doing? So I would like you to shed more light on how to identify a trend, also a consolidation area. That is my problem.
Okay. Like I already done that before. If you watch the beginning of this video, I started out by doing this analysis of the market, understanding what market you're in, and understanding how to trade in that regard. So I'm going to put this video on the YouTube and I'll send the link. If you are in my Telegram group, you are getting this link to this video as soon as we're done, okay? And you'll watch it, it's yours. I'm going to send it to you, get it. And watch it from the beginning. I talked about identifying structures, knowing when you are in the sideways market or you are uptrend or downtrend. Okay. All right, Papi, tell us.
Good morning, everybody.
You're
Good
welcome.
afternoon, sorry.
Afternoon.
Good afternoon.
You're welcome.
I don't really have anything much to say, not the questions, but just just to say thank you. I don't know if you can remember, I asked them a question if you can explain about market structure last week.
Yeah, you were here last
when
week.
you were holding the same class last week.
Yeah.
I told you to explain about market structure and everything.
Yeah.
And it was just like the reason why I asked was like as if I knew it was going to play out on that Friday. But last week I didn't really take trades. It was only that Friday I know I took trades. And I took 4 trades, 3 wins and 1 loss. And it was all because of the market structure explanation that you give.
Awesome.
That was this recent trade that happened.
Yeah.
That was just I was really happy. I sent it to the group chat where you were like, I should not overtrade.
Yeah.
But I was really I had my MFF challenge. I had just 1 day left.
Oh.
And I was in profit of about, I think, 300. I was not really active on the account because I was in school. So I was in profit of like 300. So I was trying to meet up and everything. That's why I was trying to overtrade. But I was lucky. I was able to grow it to 600 just that Friday. So then I sent a mail to them. So they told me, yes, I have a 14 days extension. So hopefully within the next 1 week or 2 weeks, I should be done with it.
Sure. That's a phase 1, all right? Of 10K.
I just want to say thank you.
Yeah, you're welcome. It's a phase 1 of 10K.
Phase 1, yes, thank you.
Awesome. You're going to pass it, definitely. You're welcome. Yes, Richard. Hello, Richard. Unmute yourself and tell us. Your hand is raised.
Okay, good afternoon.
Can you hear me? I can hear you very well, bro.
Okay, first of all, I want to say thank you for what you're doing, for educating us and telling us about things like this. I just wanted to ask, because for me, I understand how to draw the psychological levels on this GBP USD pair, but I don't really know these key levels that you talk about. Do you go back to like a week or 2 weeks before to get them? Like, how do you determine those key levels? That's just what I want to know.
Okay, if you want to draw a key level, I normally teach this to my students. If you want to draw a key level, you look at from the current price, you look at the previous high and the previous low, and the current, you're looking at your charts. You start from the 4-hour time frame. You're a day trader. You have to look into your 4-hour time frame, your 1-hour time frame. That's the way you draw all of these key levels. You draw it in these 2 time frames. Look at your 1-hour time frame, get the basic high and low of that 1-hour time frame. And then you move to the 15-minute, 1 hour, from the 4-hour time frame. Let me just show you again. You get it. Very simple. This is my screen. I'm on a 4-hour time frame. All right. Let me remove all of these things. So I'm on 4-hour time frame. All right. So I'm looking at it here. You see, this is the high. This is the high, the highest high that you can see. This is the lowest low you can see on this screen right now. This is where price is. I'm looking at current where price is at the moment. Who are these guys that are joining in now? I'm looking at this price at the moment. Here, this is where price is at the moment. But I can see the previous low, the low of the week of the entire chart. Then I can see the high of the entire chart. So I mark those things out. I'll just put a horizontal line here, there, and I'll come down here and put another horizontal line. So that gave me an idea of the overall, the length of price, where price has gotten to before and where price is gotten to at the bottom. So that becomes my top resistance level and my bottom support level. You get it now? Then you do that. Then the next thing is to look at any other areas that price has rejected or tested before. A lot of people use other strategy to do this, but for me, I'll just go to the 1-hour time frame. after I've done that high and low. And I'll come here and I can see the previous high and low again on the 1 hour time frame. So assuming you were here when price wasn't gotten last week, this was previous week, assuming. So I just do, let's say this is where price was. That's my highest. This is my highest high for now. I'll put a level there, and I'll take my lowest low. I'll put a level there. This is a zone. All of this is a zone. I can put another horizontal line here as a zone. That's it. And that's it. I've done that. Then I'll check other key levels. See price rejected here, rejected there. I'll put a line there. Price rejected here, rejected there. I'll put a line there. This is 1 hour time frame. I can see it clearly now. So price rejected here, rejected here. I'll put a line there. Price rejected here, rejected here. I put a line there. I put a line here. I can see that clearly. Okay. And then before you know, you have all the lines everywhere. So in the future, you can see price is testing it in that area. You can see how price is responding to that area. You're watching how price behave. Every time you see weak rejection or a price print a blue and it stops and it starts printing a red, that's rejection already. It's not going to go above that and it's going to start turning down. Look at this. Look at this, guys. Let me show you something that you have not seen. Let me show you. Price began to come from the downside, move up, move up, move up, and come here. And then it says, I'm done. Came back again to the downside, consolidated for a while, and then move up, came back down, move up, you see? And then push all the way. This is a news. This one was news. Remember, this one, all this thing was news here. This one was news. So undermine that spike. And then he put back up again, shot. That's it. You see, just respecting the lines. Now, this is 1 hour. If you go to the 15 minutes, you will see clearly how price is just respecting those key levels at each time. All right. Very simple. Spend more time on it, you get it. Okay, Richard, I hope you got that. Yes, who else have a question before we round up for today? Who else have a question before we round up today? We are almost done. I'm waiting to take more of the questions. Now, if you have any more questions and you want to send the questions to the Telegram group. And I already said, guys, go and join the YouTube channel. Go and join the YouTube channel. When you get to your YouTube channel, your YouTube page, type in trader_C_Brown, and you'll see my channel come up. Subscribe, hit the like button. I don't have much video there yet. I've not been focusing on that, putting more video there, but I'm going to start that soon. But I want you to subscribe because this video right now is going to be on that channel. And also the forecast for the week, the coming week, week 7. I'm going to do a forecast of the week 7. Look at the week 6. This is a forecast for the week 6. I'm going to do a forecast for the week 7. Now, the week 6, we were predicting for a down, a sell or a buy. We said we predicted for a sell, but we enter a sideways market, okay, which was obviously like a consolidation in between the moving averages. You get it? So price is still moving around. It hasn't moved up or down. So we haven't gotten a trend yet. So I'm going to be doing a forecast analysis of what to expect in the next week, week 7, tomorrow. So watch out for that. And if you haven't subscribed to the YouTube channel, please do. All right. If you are on my YouTube, if you're on my Telegram channel, you will know what next I'm going to be doing. So I always communicate to my Telegram members to be there. So if you haven't joined the Telegram group, look at it there. Some of you already had it. Go to the link on my YouTube, or go to the link on my Instagram. If you came from the Instagram, go to the bio, click the link there. You will see Telegram channel. Just click it and it'll take you right in. Okay. All of the link to access me, to get into all my contact is there on the Instagram bio. If you check the Instagram bio, that's where I have a lot of people. We're close to 700 people there now. Hopefully, we might hit 700 people or 1,000 within now and 1 week or before a couple of months. we might pass that, but with your help, guys, share the channel, invite people to join the Instagram group, okay? And then we'll grow together and then we'll have opportunity to learn things like this. All right, guys, I'm going to be out now. If there is no more question, let me see. God bless you. God bless you. Thank you, everyone. I'm going to be done now. Thank you, everyone. Thank you, everyone, for your subscription, for being there, and for following this instruction. Please put them to work. Put them to work. I want everyone to make money as well. So let's do it together. The money is there for everyone to make. That's the truth. But learning the skill is very important. I cannot overemphasize that. Some of you that have blown accounts. In fact, I'm going to talk about this to my Telegram members soon. I'm going to do a Telegram live chat with them. Some of you that are blowing accounts and spending money to blow account, invest, you put money in your account and you blow it, you put money in your account. All those money that you are wasting, I see it as waste. Put it into knowledge. Invest it in your knowledge. Have the knowledge. Be trained. Have the knowledge. It will save you from all these losses. You need the knowledge on how to master this market. And it will save you from all these losses. So stop funding your account when you don't know what to do. And then you just keep blowing it. All right. So you get it? So I want us to take it seriously. All right. Okay, guys. Cheers. I'm done. Thank you. Bye for now, guys.
Thank you, sir.
You're welcome.